Hello, everyone. Welcome to today's live market outlook update. We had the Bank of England decision half an hour ago, and as expected, there were no changes to the UK interest rate. They voted unanimously to keep it on hold, but they have downgraded their forecast for growth for the UK. They've downgraded it to 1.2% for this year, and only 3 months ago they were saying growth was going to be 1.7%. So they're blaming a sort of a global economic slowdown, and of course the B word, Brexit, is taking its toll there. So we've seen a bit of a sharp sell-off for the pound, although it sort of recovered pretty much to where it was, I think, just before the announcement came out. So we'll take a look at this. If you've got any questions today, you're watching on YouTube, there's that question box on the right hand side. If you want to look at some different markets or have any questions, put any questions in there. I'm going to be away Friday and Monday, so this is the last live session until Tuesday. So if you have any burning questions, get them in. Just a quick reminder that today for clients, because it's Bank of England Day, we've been doing zero spread today on the pound against the dollar. So effectively no cost of trading from a bid offer point of view. So that runs till 9 o'clock this evening. So when US markets close this evening, we'll revert back to the normal spread. So if you're a client, you can take advantage of that. And if you're not a client, if you go to the website, you can set up an account pretty quickly, I assume, and you can start doing that. Okay, let's have a look at the markets. Let's drag this over. Let's have a look at that pound first of all. I must admit, I found this to be quite a difficult week, and I think because we've seen, particularly with currencies, the sort of trends change this week. You know, we had a solid uptrend for the pound in January, and it's been a bit of a choppy sort of turnaround this week. The same for the euro, and oil hasn't really been going anywhere either. So I think I find it a bit tricky this week, sort of up, down. So let's see what happens towards the end of the week if we see these markets either bounce off supports or continue the weakness we've seen. So this is the pound US dollar. So if we had a look at that, so at 12 o'clock we were sort of here just before the announcement. So around about just below 129. It sold off on that downgrades because the interest rate not changing was pretty much expected. So it was the downgrade for the economy. Sold off about 50 points, fairly sharpish. And now we're pretty much back up to where we were before the announcement. If we see that as a 1 minute chart, there we go. It's a bit more dramatic. So it sells off within a couple of minutes of the announcement, lost 50 points and bouncing back a little bit now. But let's just have a look at where this puts us in the great scheme of things. I mean, we had, like I was saying, we had this great run higher in pound US dollar in January off those January lows. I don't know, at 124, traded as high as 132. So an 800-point move throughout January. I think there was some good trading opportunities in there. And it has sort of just turned that around pretty quickly over the last couple of weeks or so. I thought when we pulled down to here, maybe we'll have another push up to 132, but it's a market that's continued to sell off. But I do think now we're left with some obvious levels to keep an eye on. Let's have a look at, I think, these lows from back here. These lows, they were the lows after the vote, the vote that saw Theresa May have that big defeat. If you can cast your mind back that far to the second week of Jan. So this sort of 128 level. So that was the sell-off here. You can see into the vote. Surges higher when she lost the vote, and 128.20-ish has had propped the market up. So I think it's going to be an interesting couple of days. We've had the spike lower today to about 128.50. Let's see what happens the rest of this afternoon. You know, maybe we go back and have a look at these lows. But if the pound is going to start turning around anywhere in the short term, then I think 128 is the level to watch. You know, I wouldn't be a buyer today because we're still clearly weak. You know, just in the last half hour, it slipped to its lowest for a couple of weeks. But I think that for me is the level really to watch over the next few days. And we're very oversold on the hourly RSI, you know, but hourly RSIs, you know, they will flip around extremes as the market has a run for a few hours. But we're very oversold on this. Let's see what happens. But for me, maybe we see some stability coming in over the next few days or so, ahead of 128. But that's definitely the level to watch. I'm going to have a look at the euro in a minute, and then we're going to have a look at the dollar index, because not all of this is sort of Brexit driven, because we are seeing the euro weaker as well. You know, we saw it just last Wednesday night trade up to 115 and a bit, and it's lost almost 200 points in about 8 days. Euro US dollar, and you can see it's been a fairly relentless, just edging its way lower. If we flip this out to a daily again, I think the euro is a really interesting market at the moment, and it has been for a couple of months. Even though volatility has been relatively low, it just cannot hang on to a recovery. You know, it sort of goes up for a couple of days, 2 or 3 days, and then bang, it gets slammed back to where it was before. And we're seeing a similar thing happen again. So like the pound, there are some really obvious levels to watch for the euro. Maybe if we make this a 4-hour chart, we'll see. But we'll go back. If we go back to November, let's just zoom, take this out. Here we go. So the market, euro US dollar, slipped as low as the low 112s in November. Then we saw a good rally off that. And then since then, this sort of 112.60 area has propped up the market. At the moment, we're about, 70 points above that. So I think, like the pound, euro US dollar is still weak. But are we getting near to a place where we'll see sentiment start to change? So I think for now, it's still in a downtrend. You know, technically, we should be looking still to sell any rallies, but we're getting back to this zone here from 112.60 through to 113, where we have seen buyers come back in. So let's see. So I think we've got an interesting couple of days. But what I wanted to talk about as well, this isn't a market that we have yet. It's on the wish list. But so I had a quick look on the internet just to get the thing, get a chart up. But this is the dollar index. So the dollar index is the dollar index is it's a dollar index. So it's the dollar against a basket of, is it 11 or 13 other currencies? I can't remember. But it's the euro is the largest weighted in the basket. But what has also been causing problems for the pound and the euro over the last week or so is this comeback for the dollar. So what we're looking at here, when the market's going up, this is the dollar strengthening. So if I take this back, you can see from December 2016 down to sort of March, April last year. So for nearly a year and a half, the dollar had been in decline. And clearly when the dollar's in decline, stuff like gold and the euro go up. And then last year, from April last year, we saw that massive recovery in the US dollar. And it put pressure on the price of gold, the pound and the euro. And then over sort of the last sort of 6 weeks or so, the dollar has been under some pressure. So that has helped lift the pound and the euro. But you can see the strength over, into February. So this is the 31st of Jan here. So since the 31st of Jan, the dollar has gone up every day. Okay, so in addition to Brexit and everything else, this comeback in the US dollar is putting pressure on these other currencies. You know, and maybe if we see the dollar index trade above sort of these old highs from 24th of Jan, maybe we'll see it move higher and move back to the highs from late last year. So I think, you know, this is always an interesting market to watch. We don't yet have it on our platform, but if you go in to the search box and put in US dollar index, got it right. Hang on a second. It is there, and you can add it. There we go, dollar index futures. So you can add it to your wish list. So I've added it to my wish list because I think it's a really interesting market to watch. But this dollar strength in the last week and a half is putting pressure on the pound and the euro, as well as all the Brexit nonsense. So coming up, so the euro, these big levels to watch for the euro, running from about 112.50 through to 113. Are we going to see it turn around? And for pound US dollar, it's that 128 level to see, again, if we see the buyers come back in. And of course, gold has been a casualty in this comeback by the US dollar. We did see gold sort of thinking about forming a base earlier this week. If we flick it over to the hourlies, here we go. So we did see Feb the 4th, when was that, Monday? It hit 1308. and it had a good couple of days where it pushed up a little bit. But again, yesterday we've seen this level break. So last night we saw it trade below that level, and the price of gold slipped lower. So for me, to go back to the big picture for gold, that recovery is still intact. Our trend line looks something like that. Clearly, the gold price had accelerated away from that trend since late November. There's a couple of reasons for that. Weaker US dollar helping, and all of that volatility that we saw for stock markets end of last year. Gold again was seen as a safe haven. And a deeper sell-off, I think, would be welcome if we're looking to be longer-term buyers of gold, because it means we can have maybe more sensible stop losses. But on the short-term chart, or on the daily chart here, you can see perhaps the next level to watch. 1300 is an obvious level, obvious psychological level. If it sells off a bit deeper, the lows from January around about 1275. So at the moment, at least, the price of gold is still under some pressure. The stronger dollar taking its toll here, but let's see what happens if it does trade down to 1295, 1300. Okay, so in the short term, still weak, but medium term, that recovery off those August lows is still going. So let's see what happens if we drift a bit lower towards 1300. Oil has been, I think, for me anyway, a bit of a frustrating market this week. It started the week by briefly pushing out to fresh recovery highs. So it almost got up to $56 a barrel. If we take it back, that's where we are in the great scheme of things. The price in October started the slide from 77, traded below 43 in December, Christmas Eve. And since then, we've been recovering. We're still in that recovery. That push out on Monday to highs, suggested the recovery is still going. And then it's just been drifting since then. It's been a bit of a choppy week for oil. Let's just take this back to an hourly chart. So yesterday we had the inventories came out yesterday afternoon. The market liked it, blipped a bit higher. And I think the short-term level to watch is $53 a barrel. So it was support back at the end of January. It rallied $3 up. It was support again yesterday morning. And we're currently trading at 53.75-ish. So, but it's just been a bit sideways, over the last week or so. But 53 is the level to watch. If we see 53 broken, I think, as it has held over the last week, you would expect a half decent sell-off. I think if 53 breaks, and then the big levels we're watching, I think the really big level is clearly around about $50 a barrel, 50 to 51. So for now, any weakness to 53 maybe looks like a trading opportunity, a short-term buying opportunity, but it has been pretty directionless this week, despite that move out to a 2-month high, whatever it was, earlier in the week. So a bit of a choppy market. And now stock markets. Someone's asked about the DAX. We'll have a look at the DAX in a minute. But let's start off with the US, because I think we could be in for maybe a bit more of an interesting session this afternoon. Let's do the Dow for a change. Let's just bring this up. So let's just remind ourselves where we are. So this is where we are from a daily chart point of view. So we've seen this V reversal since after Christmas. We saw the Dow trade as low as 21.8-ish on Christmas Eve, and this week it's pushed as high as 25,400, that sort of area. But it did struggle yesterday. It was a bit of a quiet day yesterday, and it's a bit weaker coming into today. And again, I think considering we've had such a strong reversal, the test is going to be, right, if we get a deeper sell-off where the market drops 400 or 500 points, maybe more, do we see the buyers come back in? Is this a proper recovery, and there are people waiting to buy into any weakness? So let's just take a look at what happened yesterday. So yesterday was the 6th yesterday, wasn't it? So the lows from the day before, and I think these are always important levels to watch. We looked at these yesterday, was 25,200-ish, the lows from Tuesday. The market did come down to 25.3, 3 o'clock in the afternoon, pushed higher, had a little look above the highs from Tuesday, but couldn't get through. And then has sold off. There we go. You can see the sell-off in the overnight market. So it held for a bit, ahead of Tuesday's lows, but it's gone through them. So it's pretty negative in the overnight market. So let's flip this back to an hourly chart. Some of the levels to watch going into today. So we had the lows from Monday, from Tuesday. So I'm getting confused with my dates, have been broken. The lows from Tuesday have been broken. So I think the next levels to look at are clearly going to be the lows from Monday. And the lows from Monday come in just below 25,000. So a couple of 100 points below where we are now. So maybe we'll have a bit more of a volatile session going into this afternoon. So for me, I think, you know, momentum is still bullish. We're overdue a half decent correction here. If we do see it sell off when markets open at 2:30, let's see how it performs around 25,000. Do we see the buyers come back in? And after that, we've got the lows from the end of last week, just before the payrolls, around about 24,800. So we're starting into a bit of pressure going into the afternoon, or going to the official open for US markets. But I think it's still bullish, you know, so we'll be watching to see for a turnaround, and the big level to watch if it sells off much more than it is now is around about 25,000 on that. Let's take a look. The DAX again, I have found this frustrating this week. So we had so we had the DAX on, this is the German index. So the German index on Tuesday pushes up pretty much near 11,400. Now 11.4 was the highest it had been since December the 4th. So we hit a 2-month high on the DAX earlier this week. But since then, and you can see the move today, this is today's move on the hourly chart. You know, it's dropped already 250 points from those highs over the last couple of days. You know, so we've seen a really sharp turnaround. It's gone sailing through, so far at least, the lows from Tuesday. So it's a really, I thought it was going to stop. I was watching it around about 11,200 to see if we'd see buyers come back in ahead of the lows from Tuesday. But it's just gone sailing through. So now it looks like, if we're looking at targets, you know, the lower end of the range from last Friday payrolls is around about 11,100. After that, we've got the Thursday lows at 11,050, and after that, we've got 11,000. Okay, so we do have support coming up. So again, for the DAX, I'd be watching to see if we saw sentiment change and the buyers come back in. But at the moment, based on the hourly chart, it still looks pretty weak, you know. So, but I think if we saw strength coming back into US markets this afternoon, we'd expect to see the DAX picking up as well. It's looking, on the hourly chart, you can see down here, it's looking really oversold on the hourly chart. It's the most oversold since back there, since in between Christmas and New Year on the RSI. But it's still pretty weak. Let's flip this over to a daily and see what it looks like. Here we go. There's our daily DAX. So we had gone overbought. We were looking at this potential bearish divergence on the RSI and the daily. The MACD hasn't quite hooked over to give a sell signal just yet. So let's see. Let's see what happens this afternoon and tomorrow. And I think it will be dependent on what US markets do. So, you know, it's a really, for me anyway, the way I look at things trading with trends, it's been a really bit of a confusing week where we had this significant break, and then it's given it all back, you know, pretty much, and it's still losing the DAX. But I think 11,100 is the first level to watch out for. So let's see what happens. And finally, we'll look at the Footsie. Then I'll get into the questions. So let's take. So the Footsie, I would guess, has been helped a little bit today with that pound weakness. Yeah, a little bit. So the Footsie this morning did push out to 7,200. And 7,200 is the big level. You know, we were looking at this downtrend earlier in the week in the Footsie. That's broken out, but we have these old hurdles left from early November, and 7,200 is a big one. So again, if you thought the Footsie was going to fall off a cliff from here, then going short wherever we are now, 71.60 with a stop somewhere above 7,200 is not a ridiculous trade. You know, we're overbought on the RSI. It's the most overbought it's been actually for a while, since May of last year. So it's interesting. It's interesting up here, the Footsie. If the pound starts to make a comeback, then that would again put the Footsie under a little bit of pressure. I'm just looking on the other screen. It's had a quick look above 129.00 the pound. So I think this is an interesting one to watch for the Footsie. But I think the markets to watch are these US markets this afternoon. So if we're looking at the Dow, it's that 25,000 level. If we're looking at, we'll have a look at the Nasdaq actually, then I'll look at the questions. If we're looking at the S&P, there's the S&P. It's those lows again from earlier in the week, 2695, 2700, those sort of lows. But I still think these markets are going to snap back and have a little push higher. So I think it could be an interesting couple of days. And then finally, the Nasdaq. We'll look at the Nasdaq, then I'll get into the questions. Where is the Nasdaq? There we go, Nasdaq 100. There we go. I think tech has done pretty well over the last couple of weeks. So there's the Nasdaq. So again, you'd say this downtrend has been broken out of. If we picked up on the uptrend for the Nasdaq since Christmas Eve, again looking overbought. All of these markets, these stock markets, are overbought. Considering just how strongly they've come back over the last 6 weeks or so. So and again, the Nasdaq, the trend hasn't really changed. We are still pretty much in that recovery trend off those lows. I suppose it looks, something like that. So at the moment, any weakness just looks like a correction against that trend. And the Nasdaq may be the immediate levels to watch from a couple of days ago in the overnight market, 69.20, but maybe the more important levels from earlier in the week, around about 68.50. So at the moment, what stock markets are doing looks like just a normal correction against the recoveries, but we need to see strength coming back in the next couple of days. So let's see. Right, I am going to have a look at the questions now. So what's going on with the Turkish Lira? Let's have a look. Turkish Lira. So US dollar, Turkish Lira, because we saw that collapse in the Turkish Lira last summer, didn't we? Because of basically just an ongoing economic crisis in the Turkish Lira. So here's the move. It's the move last summer. So if we look at last year, coming into last year, a dollar was worth just under 4 against the lira, and then in mid-August it was up above 7. It moved really quickly. The Turkish lira effectively losing 50% of its value against the dollar in the first couple of weeks of August. It's come back a bit, so that when we're seeing the chart slide, we're seeing US dollar weakness, of course, and Turkish lira strength. And you could argue, if you really wanted to be a buyer of the dollar, the US dollar against the Turkish lira, then this is the place to do it. We've seen it form a base ahead of 5.1. It's had a move to 5.6. It sold back off, and we're back here again. We went oversold on the RSI down here. So 5. Let's round it up. 5 is, I think, the big level. So so for now, you'd be expecting maybe a bit more US dollar strength from here. But I think if it breaks 5, we could see a bit more of a comeback for the lira. But now it does look like we've formed a base for the US dollar over the last couple of months. What's the start time for zero spread? It started at 9 o'clock this morning. So it started at 9 this morning, zero spread on that pound US dollar. Let me just show you where it is. Where is it? Pound US dollar. There we go. So zero spread means the buy price and the sell price is the same. Yeah, so you can see, there you go. There it is. Compared to the oil, has got a 4-point spread or a 5-point spread, wherever it is. So it started at 9 and it carries on till 9 this evening. What are you expecting to see with the cannabis markets in the near future? I must admit, I never look at these cannabis stocks, and we do cover a few of them. Let's have a look at Aurora Cannabis. So I know they all went, there they go, this crazy move last year. Was it last year or 2017? So Aurora Cannabis went from 3, I think this is Canadian dollars, but I'm not sure, to 15. So where was it? It was 3 in October 2017. And by January 2018, it was 15, near enough. It had another run up. I mean, it's been, I think we did look at these a couple of weeks ago, didn't we? I mean, it sold off to 6, and we are seeing it's gone up 50% again, just since the end of December. So again, they're not ones I look at with any regularity, but at the moment, any weakness, you could argue, looks like a buying opportunity, doesn't it? So let's see. But it's not a market I am overly familiar with. What's happening with the DAX? We looked at the DAX, didn't we? We looked at the DAX earlier. And Apple and Facebook. We did look at Apple last time round. So for a bit more of an in-depth look at Apple, just have a look at yesterday's recording. I think we did look at it there, and I was saying that after the results, there's the daily chart. We'd had this downtrend from Apple from October last year. 140, just to recap, has been a big level since 2017 for Apple, and we did see the buyers come back in. It gapped above this little barrier of 160 after the results. It pushed higher yesterday a little bit, and it still looks strong. So for me, weakness in Apple looks like a buying opportunity. You'd expect to see it weaker today, at least initially, because we've got the overnight market is a bit weaker, isn't it? But yeah, 140 I think is the big level for Apple. I think it's only if it breaks here do you have to start worrying about a deeper sell-off. But for now, for me, if we flip this over to a 4-hour chart, maybe since those lows, you can see we've got this recovery going on in Apple in line with the broader markets. And Facebook, let's have a look at Facebook. I don't think we've looked at those, have we, recently? Look at Facebook. If we bring that up. That gap, that's a big gap, wasn't it? But so it's really, you can see when the results come out, can't you? Just how gappy it gets. So July last year, traded as high as 216. Results came out, opened the next day at 175. What's that? It's more than a 10% drop. It had been trading lower, all the way into January of this year. And again, like Apple, it gapped again last week on the results. And the problem I always have is it looks like that trend has turned around. But if you are buying now, where would you place your stop loss? And I think for me, the most aggressive place for a stop loss is the low since the gap, so below 163. Ideally, you'd want it before 140, below 140, which is almost 20% away from where it is now. So I think that's the only problem I have when we see gaps and big moves like that. But clearly, I think the moves we've seen this year have broken that downtrend. It is looking a bit overheated. So again, with Facebook, I think maybe the better setup would be if we saw the market under some pressure, sells off a bit, maybe down to 140, 150, and then hooks back around. But it does look like it's broken out of that downtrend, doesn't it? So let's see. Right, we will wrap things up there. Don't forget, we've got that zero spread thing today going on. So if you're a client, you've still got another 8 hours of no spread on pound US dollar. And if you can go and open an account now on Capital.com if you're not a client and taking advantage of it. We've just today uploaded our latest outlook for Bitcoin in 2019 as a video. So that's on the channel today. You can take a look at that. We'll be back. Tuesday is the next live session. So to never miss out on all this stuff, just make sure you're subscribed. The subscribe button is down there. Click on the alarm bell thing and you get a push off YouTube when we go live. But I think we could be in for an interesting few days now, given that we're seeing a bit of weakness in the overnight market. The pound is back above 129. So it's moved. What's it moved? It's moved about 50, 60 points in the last 45 minutes. The pound. So that'll be interesting over the next couple of days. And we do have these really big levels for euro and the pound just below where we are. So I think we could see a bit of movement, but we'll catch up with it all when I come back on Tuesday. So hope it all goes well till then, and hopefully see you then.